And I want to throw up this chart just to kind of get a bit of a refresher as to the multiple options available to the PBOC in their toolkit. The LPR is, of course, one of them. The RRR is the other. Is it more likely that they'll continue to kind of periodically tweak some of these targeted measures?
Yes, hi, Heidi. Good morning. Yes, we're going to see LPR announcement today, and we are expecting both 1 year and 5 year to remain unchanged. And talking about PBOC's toolkits, I think the RRR cut last week actually signals a move towards long-term monetary reform to guide markets to focus much more on the price-based monetary policy, which is the benchmark MLF, 7-day reverse repo, and long prime rate, rather than RRR or liquidity management tools such as MLF injection in terms of quantity, as well as 7-day reverse repos. So those three policy tools, in my opinion, are all categorized under liquidity management tools, and the benchmark policy rates will be much more in focus going forward.
What are we seeing on the loan demand side?
So we are actually seeing a pickup in loans. If we look at credit impulse data that's released monthly within the embedded within the PBOC's aggregate financing data, we are seeing CNY loans growing at a very stable pace at around 12.5%, even though we are seeing some slowdown and moderation in bond issuances or from corporate and government in the first half of the year. So that means the PBOC is actually maintaining a stable loan supply in view of the growing demand coming from the recovery of the economy.
Yeah, tell us a little bit about that recovery, because we continue to talk about how uneven the recovery had been. With the latest retail sales numbers, are you a little bit more confident that perhaps this is evening out to the consumption side of things?
Yes, exactly. So the Q2 data is actually a little bit mixed. From the headlines, we have seen that 7.9% of GDP growth is perhaps slightly lower than expected. But on balance, if we look at June's data in details, we are seeing the acceleration of retail sales, even though we are facing more COVID outbreaks in Guangdong province, if you remember, in late May and early June. That doesn't seem to have much impact on consumption side compared to the previous few rounds of outbreaks. So that gives me more confidence to think that the recovery going forward might be more balanced, as we expect consumption recovery to continue to pick up its pace, especially when China is also accelerating its vaccination rate, which allows the economy to reopen further, and that will be supportive of service sector and consumption recovery in general in the second half of this year.
Peiqian, so taking into account China's growth, not to mention its monetary policy stance, and the recent geopolitical tensions with the U.S. that we continue to see, where do you see the Chinese yuan versus the dollar?
Yeah, I think for the outlook of the yuan, the balance of risks is actually much more balanced from this standing point. On one hand, from a trade flow perspective, we do see continued outperformance of exports, which is supported by the developed economy's stimulus packages and strong consumer demands. So that will be supportive of yuan in the medium term. But on the other hand, as you have rightly pointed out, we do have geopolitical tensions between the US and China that will weigh on consumer sentiment. And also in view of Fed's talking about tapering the second half of this year, we do expect a considerable amount of capital flows back into the DM. So that might be weighing on the yuan. So on balance, we are seeing a relatively stable dollar yuan rates at around 640 until end of this year, which is not far from where we are right now at 649.
Peiqian, we just had response from the Chinese side on these allegations or the attribution of the Chinese government being responsible for the Microsoft Exchange hack. This, of course, coming from the US, Europe and their allies. I'm wondering, the geopolitical piece, the tensions, how much effect does it have on the domestic economy? It's not just this, of course, it's tensions over Xinjiang, tensions over Hong Kong as well. Will we start to see that weighing?
Well, I think broadly, the U.S.-China geopolitical tension centered around political tension at this point of time, And we are still seeing an anchor of US-China relationship, the US-China phase 1 trade deal making progress, albeit very slowly, but they are making progress. So that economic tie is not completely broken yet. So we don't really expect fundamental disruption to China's growth recovery in the near term. But that being said, we do think that the technology tensions as well as the political tensions will be affecting China's long-term growth potential, especially when it comes to technology conflicts that might be affecting China's productivity growth in the long term.